Hi everyone, welcome back to my channel. Today I'm reviewing my position in my Roth IRA account as of 21st of April 2023. So in my Roth IRA account, I am working on a beat SPY strategy where I'm trying to get additional income from selling covered calls on SPY. So I started with 100 shares of SPY and I'm selling one option contract at a time. So one contract controls 100 shares. And the goal is to produce additional 6 to 10% of income in the next 11 months. So let's see, the trades I made until last week are all here. So I started on the 31st with 100 shares of SPY and I sold one covered call, covered it back, sold another one, blah, blah. And until the 31st of March, where I closed the position expiring that day and opened a new covered call expiring today on 21st, and the strike price was 416. So for those previous 3 weeks, I just kept the call, and the premium I got for the call was $3.14. So last week, SPY was at 412. Roughly for 12.50, let's say, and the strike price of our covered call was 416. And so this I consider at the money, meaning within plus minus 1% from the price of SPY. So the strike price was within roughly 1%. Actually, if it's less than 2%, I still consider it at the money. So for that purpose, it was better to hold the call. And you can see there was still all this 141, that's all time value, right? The option was out of the money, but it had quite a bit of time value. So it was better to hold it until expiration, because for at the money options, the time value decays the fastest just before expiration. And you know, for the at the money options, the time value decay goes like this, right? So finally, this is like the expiration. Say this is week 1, week 2, week 3. So week 3 decays slightly, week 2 a little more, and finally the last week, week 1, it decays the fastest. So it made perfect sense to hold it one more week. Okay, so as I said, I decided to keep it till expiration. But today the call is expiring. SPY is trading around 412, so roughly 1% uh, below our strike price. And we need to close the position. I mean, I can let the call expire, but essentially it's better to enter a new position today, because that gives us automatically a time decay for Saturday and Sunday. So, it's always better to enter the position on Friday. And in fact, it's better to enter it earlier on Friday, because already the market makers are accounting for the fact that uh, there would be 2 days of option expiration, so the time value actually decays in Friday faster than other days. So anyway, so here are the different weeks. So this is week 0. That's right now. That's the expiration on 21st of April, and this is our position, right? Strike price 416. And I'm thinking about rolling it to, the SPY trades around 412, so I'm thinking about rolling it 2% away, so the strike price of 420. So I picked the strike prices of 420 for different expiration. This would be week 1, 1 week to expiration, 2 weeks, 3 weeks, and finally 4 weeks. So you can see 1 week to expiration. This is out of the money option, right? It's 2%. There is not much time value left. So I can kind of discard this case. And for 2 and 3 weeks till expiration, the 420 option, obviously the one with 3 weeks till expiration has bigger value, and everything is the time value, so there is more essentially to expire. But you can see already for the week 2 theta, which is the rate of time value decay is actually bigger for week 2, and week 3 is slightly less. So we get actually the fastest time decay or time value decay in the week 2 before expiration. And also it's less risky, right? Delta is smaller. So essentially, in case SPY moves against me, meaning it starts going higher very fast, there is less risk in having the position only 2 weeks, expiring only in 2 weeks instead of 3 weeks. So I decided to go with this one. So 2 weeks to expiration, expiring on May 5th, and the strike price of 420. So this is the trade I made. So I'm rolling the call. I never sell, or I never buy back and sell short. I always roll the calls because it's a one transaction. There is no difference in the prices, and I can better see what price I get from the roll. So I'm selling the old, or I'm covering the old position, and I'm initiating a new position expiring on May 5th, and the strike price is 420. And unfortunately, because I was doing all these screenshots and stuff, the price of SPY kind of moved away. It moved a little lower. So in fact, I was close. I think when I was entering the trade, the price was around 151, 152. So initially, I tried to enter it at 155. And I let it sit for about 15, 20 minutes. And unfortunately, nothing happened. SPY never went up. And since it was close to expiration, to closing time, I decided to adjust the limit price to 151. And after like a minute of waiting, the trade finally got executed. So you can see the trade got executed about half an hour before the closing. And I bought back the old call for 1 cent, which multiplied by 100 is just $1. And I got back $1.52 for each share, so $152. And minus commission, it came out to about $150 of total cash into my account. And so here are the trades as usual. So I covered the old call, all right, and I initiated a new covered call expiring 2 weeks from now. And again, I got about $150. So I bought 8 shares of Starwood and 1 share of Rhythm, just so that I don't have to keep cash in my account. So here are the trades so far all the way till today. And you can see we have this new position here. And this is the total cash I was so far able to get from the covered call, from all the covered calls, right? So each time I roll the calls, I usually get some cash into the account. And so far about $1,100 of cash. And, each time you roll, you get a little more dollars. So the overall, again, we still have 100 shares of SPY and 1 covered call, plus a few shares of Starwood and a few shares of Rhythm. So this is the market, how it behaved in the last few weeks. I think I mentioned it somewhere here that I think we're starting a new uptrend, and I was absolutely correct. So I think around here this day, I was saying that it looks like the new uptrend is starting, and indeed. So right now we are definitely on the way up. There's a few hurdles on the way, like the budget approval and things like that. But in general, I still expect SPY to keep going up. As for today, SPY moved between 410 and 412 and a half or something like that. And so I think I started looking at it about an hour before the close, so somewhere around here. But by the time I set up everything and took all the screenshots, SPY went down, And finally, I think I made the trade somewhere around here. So just about half an hour before the market closing. So anyway, so I made the trade here, then SPY went down, and then actually in the last few minutes of trading, it went up again. So if I waited till the close or till few minutes before close, I would have gotten a better price, but there's essentially no way for me to know it, and I don't like to wait till the last minute. So I'm pretty happy with the entry price for my trade. So again, here is the aggregated data. So we started with about $40,000 in the account. The rest, well, there was more, but the rest I already put into Rhythm and Starwood. So for the purpose of this campaign, the starting number or starting money was $40,000. And right now, sorry, I should actually say here, this is the same number, but it's in this column that matters. So we started with about $40,000, and right now we have $42,000. So pretty good profit. So overall profit from the SPY position plus the SPY covered calls is over $1,700, which is 4.5%, and about a little over 4%. And as usual, this is the column that I care about. That's the profit or loss from the covered calls. And so far, the profit from the covered calls is about $940, which is 2.3% or something like that. So definitely over 2%. So we're doing quite well. We are well on our way to meet the goal of 6 to 10%. So here it's in graphical form. You can see initially we were losing some money on the covered calls, but pretty much from the mid-February, the calls became profitable and kind of contributing a lot to the account. And SPY, the whole mid-February, pretty much the whole March, SPY was not doing too well, but now finally, we are in the green. SPY is positive and contributing to the profits in the account. So what's the plan for next week? So as I said, I chose a call for this time. I chose a call expiring in just 2 weeks because of less risk, and also the theta was better. And so my plan for next week is monitor the position. If the position is out of the money, meaning SPY did not go up much or not at all from the current levels, I'll roll to 1 week later or even 2 weeks later. And if the position is at the money, then I'll definitely hold, because there is still most of the time decay will be left in the stock. And if the option is in the money, I will most likely also roll. And depending how much in the money it is, I'll roll it either to the 12th of May or later. So that's all for today. If you like the presentation, please click the like button below, subscribe to my channel. I have a couple of videos in the Option School series about time value and time value decay, which I think are really interesting and contain information that is not that known. And it really helps to decide how and when to roll covered calls. So that's all for today. Until next time, happy trading.